Well, it's the same issue that's been on investors' minds since late February. This week, little has changed. So hi there everyone, welcome to the Traders Circle weekly market update. It's the last day of this financial year, the 30th of June 2026. And before I get started, you do need to be aware that whatever I say is general advice only. Last week, markets were a bit nervous, and in fact we saw the Australian and US markets sell down for all of last week, with tit-for-tat attacks occurring between the US and Iran, with Israel continuing to attack Lebanon, and really with no resolution to the Persian Gulf situation. The Strait of Hormuz has been closed pretty much since late February. There was some shipping that went through soon after the peace MOU was signed, but that dried up pretty quickly. And basically very little oil has left the Persian Gulf since late February. Over the weekend, things looked like they were taking a turn for the worst. So we saw the US strike Iran again several times. We saw Iran strike a couple of ships leaving the Persian Gulf. And the assumption on Sunday was basically we were going to open up to lower markets this week. However, on Monday morning, US officials announced through Axios, which is where they always choose to leak their information, that they had agreed to another truce with Iran, and that Iran and the US would negotiate further in Doha, Qatar, on Tuesday. Now, Iran immediately disputed this, but it was enough that that leak or information from the US official, it was enough to send US markets higher overnight, quite a bit higher in fact, and it was enough to send our market higher on Monday as well. Today our market did close lower with the Iranians refuting the US statements, and to be honest, I'd probably believe the Iranians a bit more than the US officials at this point, because so far a lot of what has come out of the US has proven to be incorrect. With the Strait pretty much still closed, again, there has been a little bit more shipping come through, but pretty much still closed, we're seeing inflation start to rise. Inflation's been higher in Australia, it's been higher in the US, and we're seeing rate rises because of that. We saw the 3 Australian rate rises, and markets now pricing in that we're probably going to see a few more. In the RBA meeting minutes that were released today, the RBA basically said that the prolonged closure of the strait could lead to higher wages, higher pricing pressures, and that could lead to higher interest rates. Basically, they were saying that they're going to lift interest rates if we see the oil supply shock, even though it probably won't have any influence on whether that oil supply shock gets resolved or not. I said it before and I'll reiterate it here, they have shown a willingness to basically tank the economy, let unemployment skyrocket, tank Australian economic growth if it means keeping inflation under control. Some dual mandate. In the US, they're also starting to price in rate rises from the Federal Reserve, and again, that's after their headline inflation, their PCE data came in above 4% for the first time in quite a long time last week. So also pricing in rate rises in the US, and that's also obviously a negative thing for shares, probably adding to the selling that we saw last week. For our market, we're in the middle of the range. We're at a decision point. The upside, we've got 9,000. It's pretty much the highest level we've been since the war began. And to the downside, we've got 8,500. Currently, we're stuck right around the middle of that range, right around 8,750 to 8,800. So we're balancing in the middle of the range and trying to decide which way we go. Not just is the market balancing, but the individual sectors of the market are balancing as well. We did see a little bit of strength in materials up until perhaps the past fortnight, and during that time we saw the banks sell off to counteract that strength in materials and to keep our market holding level. Then, over the past week we've seen a little bit of the selling in materials, and that saw a little bit of buying in the banks and financials, again to keep our market level. So at the moment, it really is pointing to us that our market doesn't want to pick a direction, that you do get, subsectors or sectors of the market, subparts of the market moving in one direction, and then you start to see other parts of the market moving in the opposite direction to ensure that the market itself doesn't move at all. When that happens, it basically says that, you know, we're tracking sideways. We don't know where to go until we get a bit more information. And so when we have a quick look at the Australian market this week, that's probably what we'll see. And here we have a chart of the Australian XJO index. Yeah, you know, since the war began, really we haven't gone above 9,000 index points. We also initially we did dip below 8,500, but 8,500's been the low for the past few months as well. So really we've tracked in a range between 8,500 and 9,000. And in fact, you know, our range has gotten even narrower over the past sort of fortnight. We've struggled to break away from the middle of this sideways range, right around 8,750 to 8,800. Like I said before, you know, the market is showing signs that it doesn't know which way to head. And looking at these technicals, we did see a little bit of a bullish signal yesterday, but that's immediately reversed today. We gave up all of yesterday's buying with today's selling. Overall, you know, we're just spinning our wheels, not really heading in either direction. Looking at the technicals here, they perhaps are slightly more positive than they are negative. You know, we've got the stochastic turning to point higher. Yesterday we did get a slightly bullish candlestick, and today we do still have the higher high, higher low. So overall the technicals still looking slightly bullish, but really more looking sideways than anything else. If we have a look at the US market, their technicals are a little bit mixed as well. They did show a bullish candlestick last night. They bounced off, you know, potentially a bit of an uptrend line. They rose through the 50-day moving average. Their stochastic crossed and turned a point higher. But, you know, they have had a lower peak recently. So they've had a lower peak, they've had a higher trough, and even though I don't really like either of these trend lines, when we start to see lower peaks and higher troughs, that basically means that the market is heading into the point of a pennant pattern, heading into the point of a triangle. And it's another indication of sideways movement. It really does sort of suggest that they're not sure of which way to head either. Now, in the short term, they did give a bullish candlestick. That might mean that we're going to see a move towards 7,500, which isn't very far away. Overall, though, their market also showing a bit of indecision, just like our own. So, market bouncing on a bit of a high wire at the moment, trying to decide which way to go. I would possibly assume that given the strength of the last 3 years, the next move will be to the upside, but we are uncertain, and you know, when uncertainty reigns, strange things can happen. Additionally, with the oil still not flowing through the Strait of Hormuz, there is I think a fairly reasonable chance we do get a big oil spike at some point, and that probably would send equity markets lower. Regardless, just like the market, we're spinning our wheels this week, waiting to see what happens next. So hopefully you guys enjoyed the video. If you did, click like, click subscribe, and we'll see you guys next time. Bye for now.